Picture this. You're juggling maybe 3 jobs, trying to feed your family, and the landlord's knocking louder than thunder in monsoon season. Your bank account. It feels emptier than, well, an empty promise. For millions, especially across India, this isn't just a bad day, it's just life.
It absolutely is. And that stark reality is what we're really digging into today. Our deep dive is focusing squarely on this profound financial stress that's essentially drowning low-income households. We're using insights from some pretty recent findings came out around June 18th, 2025, that really laid this grim situation bare.
Right. So our mission today, yours and mine, is to pull out the most important bits of knowledge from everything we've gathered. We want to go beyond just the, cold numbers and really try to understand the human struggles involved and, crucially, look for those glimmers of hope, too. This isn't about dry stats. It's about getting what's really happening on the ground and why it matters to you. So let's step onto this financial tightrope, shall we, and unpack it.
Yeah, and what immediately jumps out is just how widespread this struggle is. We've seen this picture emerge very clearly. Low-income folks in India walking this financial tightrope, but with absolutely no safety net. Our research suggests it's kind of like trying to keep 4 plates spinning while you're riding a unicycle, through a chaotic Mumbai market. It's this almost impossible balancing act.
That's a really vivid image. So what exactly is making those plates wobble so much? Our findings show salaried borrowers are typically juggling, 3 active loan accounts?
Yeah, 3 on average.
And self-employed people are wrestling with an astonishing 4. I mean, just think about that. 3 or 4 different payments every month.
Different terms, different deadlines.
Exactly. What kind of loans are these usually? Are we talking mortgages or something else?
Yeah, rarely the big wealth-building kind. More often, they're informal debts, maybe high-interest ones, or collateralized credit products, the kind with more strings attached than a whole puppet theater.
Right.
The immediate need for cash pushes them towards these, often without maybe fully grasping the long-term hit from such high costs. It's desperation, not opportunity, driving it.
And here's where it gets, truly tough. Incomes for these households, they've been stagnant, completely flat. Our deep dive found a staggering 77% of low-income households reported 0 income growth over the last 5 years. 0.
0. Let that sink in. Zilch, nada.
Imagine working that hard for 5 years and seeing absolutely no increase in what you bring home. It's disheartening.
It's brutal.
And all the while, the cost of living just keeps climbing, doesn't it? Food, housing, medical costs, the basics are just eating up whatever money they do manage to earn. This creates this awful squeeze on their ability to save anything. And saving is just fundamental for any kind of stability.
And the numbers really hammer this home. This reality leaves them with less than 20% of their income for savings, which, compared to the national average of around 30%, it's a huge difference.
It is. So when expenses are constantly higher than income like this, what do people do? What are the desperate measures they're forced into?
Well, the findings are pretty stark there, too. We learned that, maybe 1 in 4 low-income individuals with no savings might try formal options, microcredits, maybe a bank loan if they can get one. But the vast majority, a huge 65%, are forced to borrow from friends and family, which, puts a strain on those relationships, too.
Of course. Strains that social safety net.
Exactly. And then, in what's just a gut-wrenching situation, 6% are actually selling or mortgaging their assets.
Wow. Just picture that. We're talking about families having to pawn maybe sentimental items, family gold.
Grandmother's bangles, perhaps?
Yeah, just to pay for a sudden hospital bill. This isn't hypothetical. It's a horrible choice facing so many.
It is.
And what are the main things triggering these crises? What's draining the money?
Medical emergencies are the big one. That accounts for about 30% of these situations.
30%. Wow.
Yeah. And children's education isn't far behind, at around 22%. Then you got things like marriage costs, unexpected job losses. It all just piles on.
Adds insult to injury.
Which brings us to, the human cost of all this. Beyond the numbers, financial stress isn't just about spreadsheets. It's sleepless nights, constant anxiety.
That dread of what's next.
Exactly. Every unexpected bill feels like a potential disaster.
Yeah. And our research showed that a big chunk of the population, 24%, is dealing with serious stress and money worries. Right up there is the second biggest trigger, just after work problems.
It's this constant gnawing worry that just seeps into everything.
Absolutely.
And for women, that burden seems even heavier. Around 26% reported feeling this intense pressure. They're often juggling family, work, health issues.
Like a circus act, but without any applause.
That's a good way to put it.
Yeah.
The weight just falls disproportionately on them.
And a big part of that anxiety must be the unpredictable income, right?
Oh, definitely. We found so many low-income households work in the informal sector. Think street vendors, daily wage workers, small shop owners.
Where your income can change dramatically day to day.
Absolutely. There's no steady paycheck you can rely on.
So saving becomes almost impossible.
It's like trying to hold water in your hands. It just slips away. So when life throws that curveball, a medical bill, a school fee, even just a few bad days for business.
They have to dip into whatever tiny savings they have
Or take on more debt, often really quickly. This vulnerability, it's just a constant source of deep stress.
So let's talk more about these loans, the elephant in the room. Our research showed self-employed people really lean on informal credit, right?
Heavily, yeah. Those local money lenders, charging interest rates that make credit cards look generous.
Ouch. And these loans are often collateralized.
Very often.
Yeah.
Meaning you're putting up your home, your shop, maybe the only valuable thing you own, just to get the cash.
That's incredibly risky.
Hugely. And salaried workers, they aren't necessarily much better off, with 3 active loans on average.
That's 3 monthly payments, 3 sets of paperwork.
3 reasons to dread the start of the month. It's this relentless cycle, really hard to break free from.
So why? Why this huge reliance on loans, especially the informal, risky ones?
Well, a big factor we identified is just limited access to formal banking. For many low-income Indians, walking into a bank and getting a fair loan, it's like trying to get front row seats for a massive concert. It feels inaccessible.
They just don't have that option easily available.
Precisely. And our research showed they tend to prefer what they see as safe saving options, basic bank accounts, fixed deposits, post office schemes. About 79% stick to those.
Low-risk choices.
Exactly. Things like stocks or mutual funds. They seem way too risky. It's like betting the farm, which they just can't afford to do.
Okay, so it's not just about the income level, though that's obviously huge. What's fascinating is that financial stress is also about not knowing how to manage the money you do have.
That's a critical piece. Our deep dive revealed only 1 in 4 Indians is considered financially literate.
Only 1 in 4.
Wow.
Yeah.
That means 75% of the population is navigating this incredibly complex financial world, basically without a map.
That's huge.
And financial literacy, it's not just about, balancing a checkbook anymore. Does anyone even do that?
Probably not.
It's about understanding budgeting, what interest rates actually mean for you, and crucially, having the knowledge and confidence to say no to that predatory moneylender.
It's fundamental knowledge, and without it, you're just so vulnerable.
Immensely.
And for women, the hurdles can be even higher, right? Cultural factors, psychological barriers.
All sorts of barriers often prevent them from really mastering money management. But, and this is really remarkable, when they do get the chance, the guidance, the opportunity.
So incredible savvy.
Absolutely. Consistently preferring lower risk, higher return investments. Looking for loans with flexible terms they can actually manage. It's like they're saying, just give us the tools, give us a fair shot, and watch what we can do.
That's really powerful.
And it leads us to this inspiring trend we found. Women entrepreneurs.
Yeah, tell us about that.
Our research shows about 27% of small businesses in India are actually women-owned.
27%. That's significant.
It is. And these women aren't just running businesses. Often they're the main breadwinners. For about 37% of their households. They're even using AI, using tech to streamline things.
So they're innovating, adapting.
Definitely. Proving you don't need a fancy degree to make things work against the odds.
There's always a but, isn't there?
There is. They're still incredibly stressed. They're juggling family, work, the constant financial pressure. It's that roller coaster image again.
Cooking a 5-course meal on a roller coaster.
Exactly. They have amazing grit, no question. But they really need targeted support.
And these individual stories, inspiring as they are, they also highlight the bigger systemic issues, don't they?
They really do. When you pull back and look at the whole picture in India, the inequality is stark. Our findings show the richest 1% hold something like 22.6% of the national income.
Wow, over a fifth.
Yeah. While the bottom 50%, they're scraping by with just 15%. It's not a gap, it's a chasm.
The canyon, yeah. And long-term unemployment just makes it worse, adds to the stress, the health issues.
Absolutely. And this connects to another really important point. Property rights.
Right, you mentioned that. What did you find there?
We found nearly 1 in 5 rural landowners lives in constant fear of losing their property because the documentation isn't secure.
So it's not just red tape, it's a real barrier.
It's huge. It means they can't use that land as collateral for a decent loan. It locks them out of subsidies, basic services sometimes. Imagine owning land, but being powerless to use it to improve your life.
That's incredibly frustrating. Okay, so given all these challenges, the individual struggles, the systemic problems, what are the pathways forward? Are there solutions emerging?
Well, we did explore some promising ideas, drawing from experts like Jasbir Juneja at Red Seer, things like making affordable health insurance much more widely available.
That would tackle the big medical emergency trigger.
Exactly. Offering better loan terms, fair terms, not predatory ones. Providing proper financial planning services. And crucially, financial literacy programs that are actually engaging.
Less like reading a dense manual.
Yeah, less of that and more like, let's learn to save while laughing at terrible investment ads. Practical, accessible knowledge.
I like that approach. And what about technology? Is fintech helping here?
It definitely offers a real glimmer of hope. Thanks to government pushes and digital services, something like 80% of Indians now have bank accounts. That's a massive shift.
Huge progress.
And fintech companies are stepping into that space, reaching people who were previously unbanked, offering microloans, simpler savings tools, things you don't need a finance degree to figure out.
Okay, that sounds promising.
It is, but it's not a magic bullet yet. Rural areas still lag behind quite a bit in using these digital tools.
Right, the access isn't uniform.
Not yet. And the gender gap in financial inclusion, that's still stubbornly wide. So, good progress, but definitely more work to do to make sure everyone benefits.
Makes sense. Keep pushing for equitable access.
Yeah. And, amidst all this, we found another fascinating insight. It came from a 2025 study in Fugong, China, actually.
Oh, what was that?
It suggested that poverty-related stress can actually fuel entrepreneurial persistence, but only up to a certain point.
Interesting, like a bit of pressure helps, but too much is crushing.
Exactly. Too much stress, people just give up. But just the right amount, and they fight like their life depends on it.
And India's women entrepreneurs are kind of proof of that grit.
They really are. But again, grit alone isn't enough. They need practical support incubators, mentorship, access to fair loans that don't feel like a trap.
Right, loans that empower, not enslave.
Precisely.
Okay, so let's try and pull this all together. What are the big takeaways here?
Well, we've really uncovered the depth of the financial challenges facing low-income households in India, the burden of multiple loans, those stagnant
The
incomes.
huge human cost of the stress, the critical need for financial literacy.
Exactly. But we've also seen incredible resilience, especially from women entrepreneurs. And we see potential in things like fintech and targeted policies.
So when we really understand these specific struggles, especially for people tangled up in these complex informal money systems, it does raise a big question, doesn't it? Could making financial literacy as common as, say, a cherished family recipe and making access to genuinely fair credit as easy as ordering takeout online, could that unlock something huge?
Not just stability for individuals, maybe.
But a real wave of national economic empowerment.
It's a powerful thought. This deep dive, it's definitely been a wake-up call. It shines a light on these hidden struggles.
But it's also a chance to maybe help rewrite that story. We've learned low-income Indians aren't just statistics. They're people with dreams, families, incredible resilience, often surviving with a smile against the odds.
Yeah, and clearly governments, banks, fintech, they all have a huge role to play in providing that foundational support.
Absolutely. But maybe it's also on us in some small way to engage.
How do you mean?
Well, maybe it's just talking to a neighbor about budgeting, or sharing a useful financial tip over chai, or even consciously deciding to put the money from that fancy coffee into savings instead.
Small actions, yeah.
Small actions. So as you, our listener, reflect on all this, what stands out to you? What do you think is the most impactful step forward we could take together?